12% of the respondents of our Delivering Alpha survey said it will be the best place for returns next year. Let's discuss that. Joining us now is Brendan Ahern. He's the KraneShares CIO. Brendan, good to see you as always. Happy New Year. We talked about this, Sarah and I, earlier. Generally, global markets perform well. S&P up 24%. Europe's up mid-double digits. Brazil, Mexico up. Nikkei had a great year. China, though, down on the year. Can you sort of encapsulate what happened in China for us this year and your view on 2024?
Policy removal rebound has been very tepid. It's been an incremental rebound. The Chinese government doesn't want to create inflation. They don't want to go further in debt. So they've supported the economy, but very incrementally, and you're seeing consumer confidence come back quite slowly due to the proverbial scar tissue related to zero COVID, but also the pullback in property prices where Chinese households have significant, almost 2/3 of their wealth is tied up in real estate. So this combination of zero COVID, scar tissue, the decline in property prices has weighed on the consumer and therefore a very slow rebound, missing investor expectations.
And yet I can't help but notice that the global investing community seems to be very worried about what's going on in China. There have been outflows in terms of investing. Even Taiwan investors have had outflows recently from China. Most of these concerns seem to be centered on political issues, on the fact that Xi Jinping seems to be moving the country more and more in a sort of anti-capitalist direction and more state control. Is that a fair characterization? What accounts for all of these outflows that we're seeing from global investors?
Well, I mean, stepping back, Bob, big picture, the S&P 500 from the global financial crisis low is up 844%. And MSCI, all country world ex-US, is up 276%. So basically, non-US equities are up not even a third versus US. So the US S&P 500 has beaten non-US equities in 12 of the last 14 years. 14 years is 56 quarterly client calls, board meetings, trustee meetings. You know, Harry Markowitz passed away earlier this year, but I would argue diversification and asset allocation has died for many, many investors. So I think, A, you have a exodus out of non-U.S. equities, and that includes China, unfortunately. But I think you're starting to see some changes, particularly on the geopolitical front, where President Xi's speech at the APEC to U.S. executives was very clear, an attempt to rebound consumer confidence.
I don't know. I think investors think he could have gone further in terms of promising higher growth or more stimulus. But there's one other factor, Brendan, that you didn't mention besides COVID and geopolitics, which I think really weighed on investors in China this year, and that is Country Garden missed a bond payment in August. And I think that helped reveal the sort of severity of the liquidity problems in the real estate market there, which I'm not sure have been taken care of. Isn't that a big headwind?
Yes, Sarah, there's going to be an ongoing issue with property because of these distressed players. Earlier this month, I was in China, and in meeting with a number of investors, institutional investors, they spoke about the awareness of the Chinese government and policymakers not to create a Lehman moment in China. In China, the view is the greatest error by a central banker globally was the U.S. Federal Reserve allowing Lehman Brothers to go bankrupt, which created a financial crisis. So they're very much on top of trying to prevent a disorderly bankruptcy. If it's Country Garden or Sunak or Evergrande, the problem isn't going to go away, but it's receiving a lot of policy attention, which lessens the probability of a crisis.
Brendan, thank you very much. Appreciate it. I'm sure we'll be talking to you in the new year. And again, Happy New Year to you.